Thank you, Christy. Good morning, everyone, and it's really a pleasure to be seeing people face to face again. And it's really nice not to sit in a Zoom call trying to see how people respond, react. A little bit of a journey for Aeris has been over the last 9 years. As a new executive team, we took over 9 years ago. The company at that point had 140 million US in debt, had 2 operating mines, both losing money, and we started a lengthy restructure process. The debt restructure took us 5 years. We took the debt from 140 down to 50, down to $30 million, and then we moved all the non-core assets out, and we ended up only with a copper asset, the Tritton copper mine, left in the business. But the real transformation started in the last 12 months, really where we bought the Cracow gold mine from Evolution, and that is where the transformation started. We very quickly saw the business going from a $19 million company to over $400 million company in 12 months. The debt has come down. We were able to raise $50 million last week, and really that journey and the plans going forward is what we'll discuss. So in terms of the disclaimer, we looking at our business currently, we got the Cracow gold mine sitting in Queensland, currently doing 70 to 75,000 ounces for this financial year at about $1,550 an ounce. Now that's about $800 an ounce margin on the current spot price, so it does generate good cash. And then the Tritton copper mine doing around 22,000 tons of copper at about $3.60 a pound. And there's a significant margin sitting in that today because the copper price is above $5. So both from helping with commodity prices, but also bringing in a new asset, started the transformation. You'll see in the slides coming up. We then also have a joint venture in Torrens, and then Cambeligo with Helix. We own 30% of that specific asset. There you can see the last 12 months. We raised money at 3 cents when we bought Cracow in June last year. Currently, the share price is above 20 cents. The market cap has gone to over $400 million. The big numbers there for us is the debt left in the business is only $26 million. And as of yesterday, we had $73 million of cash in the bank, well funded, and some big plans going forward to create some real value and extending our mine lives. And the money we raised, a big portion of that will go to accelerating our exploration and creating the mine lives for both these mines and extend the mine. 12 months ago, we hardly had any institutions to register. We now got 34% institution. Management has got a decent stake, and we've seen the value over the last 12 months. Some of the items which did create value, we've also found a new deposit at Tritton, the Constellation discovery. You can see there when that started, and some of the latest results, a huge excitement around that project. And then the half-year results, which you'll see some of that coming up, is where I think the market realized the company has changed significantly. So the last 12 months, as I said, in 1st of June last year, we were 3.4 cents and $19 million. Currently, we 19 actually is 20 cents and over $400 million. I think that is the key change where you can see cash from operating activities has gone from $6 million in December 19, that half, to over $72 million in the half year up to December last at 2020. So significant changes, and really it is at the back of the acquisition, it's the back of good commodity prices, and it's on the back of good exploration results and operating results from both the mines. A bit about Tritton. So you can see at the bottom right, Tritton has always delivered about 22 to 27,000 tons of copper since we got involved with the business. It's been in production from 2005. We got a very large tenement package. And really the challenge for us is, or the opportunity for us is now, in the last 9 years while we were restructuring the balance sheet, trying to keep the business on track, we didn't really invest in new projects, but we kept mining the current projects. And really the opportunity is all in this slide. Now that we've funded, we've got the balance sheet to do it, there's a whole range of projects in a pipeline which we can bring in. And the whole idea is you look at Tritton is currently the underground mine we're mining, and Murrawombie. So those are the two mines. Tritton is getting fairly deep. The grade is starting to drop off as it gets deeper. But then you sit with projects like Budgerygar, which we kicked off in the last 12 months. You will replace low-grade, high-cost tons from Tritton underground with better quality tons at lower cost from Budgerygar. For example, Tritton we mine at 1.6, 1.5% copper. Avoca Tank is a 900,000 ton reserve sitting at 2.6% copper plus 0.9% gold. So the whole idea is investing in the next 12 months, bring those development pipeline projects into the production pipeline over the next 2 or 3 years, and you'll see the extension of the mine life by bringing those projects in. And then you've got all the exploration projects listed there, which is Constellation, Budgerygar, Kurrajong, and so on. Now, the funding which we just raised, a lot of that will go into drilling all those exploration projects, but it also secures our position to fund those new projects. At the current copper price, it can be funded. If the current price comes down a little, it can still, but if it really comes down a lot, you can still fund those projects because we got the cash in the bank and we can ensure that once you start those capital projects, you can finish them off. Then on the exploration side, we got over 2,000 square kilometers of ground in a very highly endowed area, which you can see Aurelia sits there. You've got the CSA copper mine, you've got Peel, you've got Helix, a whole bunch of us sitting in that region, and all of us drilling and actually producing copper and gold for that matter, and other base metals in the region. So our tenement package, which you can see there, we have since November, we've drilled out Constellation, which you can see on that slide. We identified it in FY20, drilled the first hole in November, hit nearly 20 meters at 2.5% copper. Drilled the second hole, we intersected 3.5 meters at 22% copper high up on the surface. So that was a great result. We will also spend time drilling Avoca Tank out a bit further because it does extend at depth. That whole white area on the top hasn't been tested at all, so we'll kick off as part of this exploration drive, bringing all those into the pipeline on the Greenfields exploration side. But having a good look at Constellation, so it's 45 kilometers from the plant. We've drilled quite a lot of holes, and what we've seen so far, it keeps on stepping out. So the strike has now gone from 150 to 200 meters. We've traced it down 1,150 meters down plunge, and we've got it all the way up to 8 meters from surface. So as we drill it, the results keep on getting better, and the size of this ore body has significantly extended. So we're already starting to work on a program on how quickly we can get a mining lease in place, how quickly we can start mining, because you look at this slide, although it's a little busy, that's the upper end of the Constellation deposit. And what we've seen, you can see some of those results, 47 meters at 3.9% from 11 meters from surface. So what this will allow us is to do a small open pit, high grade, low strip ratio, generate a lot of cash very quickly, and then you go underground and mine the rest of the ore body. So the whole aim for us is how quickly can we get this into a resource so we can start the application for a mining lease and bring that into a production pipeline within the next two to 3 years. And so that's all part of this replacing low-grade tons with better quality tons. And this is a specific one which is really exciting and has everyone excited at the mine over the last 6 months. A bit about Cracow. So Cracow we bought from Evolution in July last year. We bought it for $60 million cash up front. There's a $15 million deferred payment. And then there's a net value royalty, which is basically defined as a C1 cash margin, so basically an EBITDA margin, which you'll pay them 10%. So it's only for 5 years. It's capped at $50 million. The simple math there is if we need to pay them 50, we would make $500 million. So there's a good return for us, and it's all based on both our views on the potential to extend this life beyond 5, 6, 7 years. This has been a great asset for us. You can see there the production Evolution hands always at about 80 to 90,000 ounces. This year we'll do between 70 and 75. When we bought the asset, we had 57 to 62,000 ounces, but I would expect that to be better for FY22 now that we've got a better feel for this operation. There's a history. You look at those blue bars there. It never had more than 3 to 5 years in reserve life. You can see it's dropping off in the last 2 years, but that was due to lack of spending, because in Evolution hands, they were also always looking for 100,000 ounce plus ore bodies to add to the resource. In our hands, we look at anything we can find between 10 and 20 and 40,000 ounces, and you'll see when I show you this. So it's all about reinvigorating the exploration spend to look for those smaller ore bodies, which will all then keep on extending the underground mine. The whole aim for us is how do we create a 4-year rolling underground mine plan, and then you'll close it out. As you can see in this slide, I might just skip to this one, you'll close it out with open pit mines, and there's 900,000 tons of stockpiles sitting around the mine. So the whole exploration plan is the near mine exploration. We have already pushed the plant from 570,000 tons to 650,000 tons, because we've got a view that if there's 900,000 tons of 1 gram a ton stockpile sitting around the mine, that mill should run as full as it can by adding those tons in to your underground mine. What that allows you, drops your cost, it picks up your productivity and efficiencies, and you can start to look at how do I re-look at the underground mine plan and create more ounces with those things. We will add another drill rig in this year, this coming financial year, so we allocated $9 million. Originally, we said we'll do $13 million exploration over 2 years. We're now saying we're going to push that harder and bring those resources in faster. The other area, which we call new space, that's greenfields exploration. That's areas outside of the current plans. And we've allocated, although that was not a priority for us 8 months ago, we now said, look, let's get that going. We'll put $4 million into that in the next 12 months. In the resource updates, you can see there's already been updates on the drilling we've done. Roses Pride, Klondike has significant improvements in the resource. And then we're looking at all reserve update by August to see where we sit by August in the drilling we've done. Back to this slide, you see the ones which is highlighted in red there, the current drilling, which we've drilled, and each one of those either has already resulted in a resource update or will result in a resource update or increase. All the black areas are still to be tested. So the additional drill rig will accelerate testing all those black circles to see how quickly we can bring some of those forward. Really exciting stuff. The guys at the mine has been great with actually getting into the Aeris portfolio, and we've seen good results both from operations and from exploration. Then you step out of it. So this is what we call new space. Aeris has now been prioritized. And we've seen that both Cracow Southwest, Ballymore and Boyard all can potentially be another Cracow or a significant increase to the resource. So we've allocated that $4 million to start drilling those out and see what we can find. So to summarize Cracow, it was absolutely the right asset for us. It was at the right time, and that was the start of the change of the business. But what we've seen so far at Cracow, has delivered on every single thing we've expected. We're putting a new tailings dam in that will be done by August, so that's just our commitment and certainty around the life of the business. On the M&A space, we always said we want to grow this business to more than one asset. We are still looking. We do have an aspiration to become more of a multi-mine. We focus on copper and gold. Since the acquisition, we have looked at quite a few more opportunities. The challenge now is you've got to average up. So, 10 or a year or so ago, we would look at anything, anywhere, where now you need to be a bit more selective in what you're looking for. So that is still a big aim, and we will look for opportunities to grow through M&A. I guess in summary, Cracow is a great acquisition. We're in line to achieve the guidance. The tailings dam will be in place, and the exploration success so far has been really exciting. At Tritton, we will achieve the 22,000+ ounces, tons of copper. The Constellation deposit is really the exciting bit, and it just shows that if you spend the money, you'll find more. And the deposits around Tritton and in the region typically comes in clusters. So once you find one, you potentially find more. So it's all for us to allocate those funds to the greenfields exploration and accelerate further than just get distracted on Constellation. So the team has split up. Constellation will be a team who will work on that, but the greenfields exploration will continue, and we'll keep looking at those. I guess from a corporate point of view, we have repaid $48 million in debt this financial year already. We sold a non-core asset. We did raise the $50 million, and we're now net debt positive at $47 million. And I must say, that feels good. After you start off with $40 million US in debt and wonder how you're going to pay your bills for a while. Really exciting stuff. What makes Aeris different? We are a team who's been together now for over 10 years. We used to run Northern Goldfields as an executive team together. We now have diversified, strong cash flows. There's a good fit between copper and gold. Copper, as we heard earlier, is a commodity to be in, with the forecast looking really, really exciting. And this is a great platform for us to go and see what else we can add to the portfolio and get some shareholder returns. From a copper point of view, we are only one of a few ASX-listed companies in the copper space. So that is one of the unique things for us, which we can offer shareholders who wants to be in copper. Thank you very much.